Hello and welcome to the Weekend Investing Daily Bite of 27th of November and a exciting good session. Markets have been range bound for the last 2 days, and today, after the Adani Group came out with the news from their end that they have not been, the top management is not indicted for any bribery charge, etc. The Adani stocks took off, some stocks even hitting 20%, some 10%, 15%. So a huge relief rally sort of happened. Some of the Adani stocks actually have gone beyond from where they dropped 2 days back. So from that point of view, there is no overhang left on the markets of that saga. Another thing that I want to first introduce and let you know is about the portfolio momentum report that we have launched. So this is a customized momentum report that you can access to on our website. You can go to the website, and the link is there in the description, and upload your stocks and the quantity of stocks that you hold, and it will give you a momentum score for your portfolio. And then you can compare that with other portfolios and see how the portfolio is looking like from a momentum point of view. So it's like a health checkup from a momentum perspective. Hundreds of folks have already used it in the last couple of days since we launched it. And you can also go and do the same. You can scan this QR code or look at the link in the description. So what it is calculating is the percentage of your portfolio, uh, how much of it is allocated in high momentum stocks, low momentum stocks, gives you a performance of your overall momentum score. And then if some of the stocks in your portfolio are dominating others in terms of skew and concentration, it will also flag out and give you a report. So you can go to the website, you can add in your stocks, the quantities, you can submit it with an email, and a report comes back to you within a few minutes, giving you all the details of your portfolio. So do this exercise if you like. And today's video is going to be on Pakistan, how Pakistan has witnessed a surge in 2024. We'll discuss that in the second half of the session. But please first read the disclaimer carefully and click on the bell icon and subscribe to the channel if you haven't so far. So markets, you can see third day running, markets have been range bound. Last two sessions were absorbing the rally that had happened in two sessions. And today also we were within that same range at 0.33% on Nifty. Post the Adani news today, the markets did try to go up, but was sort of restrained within the range. So no harm done, no major gain also made. But as each day goes by, you would have more and more confidence on the current level, and a potential to go higher is getting stronger and stronger. Many stocks, like for instance HDFC Bank, etc., are also at their cusp of breakout. So any one big news on any one big counter can really trigger a rally that can go at least to 24,500, 24,600 levels. And then, of course, it's a one will have to see whether we are able to cross this pivot or not. Once this pivot is crossed, I think a lot of tailwind will come into the Nifty, and you may have a good, nice leg up going forward. But if we do drop without crossing these levels, then first this gap needs to be covered. 3 days, this gap has not covered, so it is giving a sense of some stability and strength in the market. But if this gap covers and then market starts to come below that, then of course it's a different story. The next support will then, of course, again be the 23,300 mark. Uh, it does seem like to me that we are trying to, you know, go higher, but then let's see what happens. 0.33% on Nifty. Nice Nifty next 50 move of nearly 1% at 7185. So this has broken the range of the 2 days and gone higher. You also had mid caps within the range, largely at 0.5% up. You had small caps up, moving up nicely. Again, small caps are doing much better than other parts of the market at plus 1% today. And Bank Nifty was completely muted at 0.21%. So not much change in any of the indices. Some of the indices have moved forward uh, and upwards. Momentum trend towards the green, 333 advances to 161 declines. FIIs for a change on the previous session have bought 1100 crores. DIIs sold 1900 crores. So the tables seem to have turned for that day. 25th November, of course, was the day of the MSCI rebalance, so it was a odd one out, you can say. So let's see now whether this trend of no further sells from FI cash continues. If that continues, I think that will give a lot of confidence to the market. Heat map today was largely flattish, I would say. NTPC gaining some ground. Maruti, Mahindra, Bajaj Auto, JSW Steel, Coal India, Bajaj Finance, and HDFC Bank in particular doing well. And of course, the Adani stocks, Adani Enterprise up 11%, Adani Ports also up 6%. You also see in the Nifty Next 50, Adani Power nearly 20%, Adani Green 10%, Adani Total Gas almost 20%, Adani Ensol 10%. So huge moves, mostly recovered the lost ground. Some have yet to recover something, some part of it. Siemens up 2.5% on good results, IRFC 2.5%, HAL 2.5%, Zomato 1.5%, Ambuja Cements again from Adani Pack moving up 4.3%. So the whole day was largely about recovery in Adani stocks. Sectoral trends, you had energy stocks led by Adani Energy up 1.5%, commodity stocks up 1.3%, public sector enterprise stocks also 1.3%, metals up 0.8%, consumption stocks 0.7%. So good rally in these, and the rest were reasonably muted but gravitating towards the green. PSU banks flat, IT slightly in the red, real estate after 6.1% last week, down 0.4%, and pharma actually not going anywhere in the last 1 week, 1 month, or 3 months, minus 0.6% on that. Here you can see energy stocks uh, e sort of peeping back up above this support line. You had Adani stocks ruling that particular pack. Stock spotlight was on Adani Total Gas. You can see here it's dropped from 660, 70 odd levels, has now retraced back to 694. So this entire saga that happened over 4 or 5 days, net, there is no loss here. Of course, from a larger perspective, Adani Total Gas is down hugely from its all-time high. Here you can see from nearly 4,000 rupees, it has taken a support near this previous bottom and bounced from here. So let's come to the story of the day. Pakistan is witnessing a stunning surge. So this is the last 10 years of Pakistan index. KSE 100 is the index there. And we are doing this story just for general knowledge. I mean, I don't think anybody is going to go there and invest in Pakistan Stock Exchange. But as students of the market, we need to have good information about all markets around us, and this one is really around us. So last 10 years, what has KSC 100 done? So we've divided this by the currency. KSC 100 divided by USD Pakistani rupee. So it has given all comparisons in US dollar terms. So the white line is the KSC 100. You can see that over 10 years it has done nothing. It's up 14.7%. The blue line is that of Nifty in dollar terms. We've done 107% in about 9+ years, maybe 10 years. And the white line, the orange line is that of S&P 500, which is up 191%. So you can see in the last 10 years how massive a beat has the US market done over Nifty in terms of US dollar terms. And no wonder, FIs want to take some money to the US markets. And in terms of the KSC 100 in dollar terms, it has not really done much. But in calendar 24, and which is now coming towards an end, 11 months, KSC 100 in dollar terms has zoomed 60%, while S&P is up 26% and Nifty is up only 9%. So something has really moved the needle on the Pakistan Stock Exchange, where this year it has clocked 58%. I'm also reminded of Argentina, where the new president is making some huge sweeping changes, and they are also in amongst the top uh, performing markets of the world in dollar terms this year. Now let's also look within the Karachi Stock Exchange 100. So when we compare in local currency terms versus USD terms, you can see that 10 years, while in USD terms is up only a little bit, in local currency, of course, they are up like 5 times, because the local currency has been slipping very, very hard, much harder than the US dollar INR slip. And that probably uh, has really sort of zoomed since 2020 3 mid. You can see here that the Pakistan rupee has been sliding very hard versus the US dollar for 2 years, from 2021 at 160, and it almost halved to nearly 300. So within a matter of 2 years, and then it has stabilized, appreciated a bit, and stabilized here at 277. So if we were to see uh, the last year and a half, or the same period from July 21 to July 23, 2 years, in USD terms, you are basically down 55%. In local terms, you're down only 17%. And April 2023 onwards, because the currency has remained flat, these two have gone up together. So there, something has happened in the last year or so where the currency has stabilized in Pakistan, and that probably is causing more confidence in the markets going forward. So in terms of what is contributing to this sudden surge, so some theoretical and qualitative background is that uh, Pakistan has secured a $7 billion loan from the IMF. So again, the same thesis that markets will follow where the money goes. $7 billion from IMF is possibly causing a lot of inflows of money into various parts of the Pakistani economy, and that is causing stocks to go up. General elections have been conducted successfully. There is some stability. There is some key structural reforms that are happening. Inflation has dropped from 38% to 7.2% within a year and a half. So that, I think, is also giving a lot of confidence. There's growth in several of the industries. Domestic investors are driving market growth as foreign portfolio investors pulled out before. So have we not heard of this story before, that domestic investors are the ones who are driving the market growth? Market cap to GDP ratio stands at 11% only. I mean, this is abnormally low, and the long-term average was 16.9. I think in India, the market cap to GDP ratio is somewhere near 140%. So I mean, the markets are much cheaper, and nowhere in comparison to India markets. The PE ratios, forward ratio, is also at 4.6 versus the 5-year average of 6 there. So I mean, India is at 25 or something like that. So this is a completely different market, and of course, there is more room to go up in a market that has been beaten down so much. So as I normally say, there is a good price for a bad market, and there's a bad price for a good market. So maybe right now Nifty at 24,000 is not such a good price for the India market, but maybe Pakistani KSE 100 is at a point where, even though you may call it a bad market, it's a good price. So that's how the sort of pendulum will flow from one side to the other. Whether this can continue or not, so Pakistan's political volatility and frequent policy shifts can disrupt this progress, of course. And that, of course, is to be seen how the new government takes it forward. And there are always, the attempts by the previous governments to overturn the current government. The Pakistan is also heavily reliant on imports and external financing. So if somebody, Trump, comes in and cuts off their financing, I mean, that can really harm that market. So can Pakistan continue to perform well? What are your views? Please post it in the comments below. We are certainly not advising you to invest in Pakistan, but knowing that, number one, where money flows, markets will go up. That is happening. Number two, that the domestic flows are overpowering the foreign flows that we are seeing in India also, and that is true in Pakistan also. And bad markets can have good prices, is the lesson that we can take forward from here. Thank you so much for watching. Please like and share these videos, and I'll see you in the next one. Bye.